It is May 9th, Thursday, and we'll do what we always do, and that's jump right into it on the monthly time frame. Not a lot of change here, right? We haven't got a lot of movement in the past couple of days. You can see on the monthly time frame, we're just remaining inside the previous month's range. Not really much going on there. We have some levels here that are close on the upside. That 52.43 equilibrium seems like a level that the market may want to test, and so we'll just be kind of keeping an eye on it. Should we get up there, we may see some continuation towards these highs. These are up at 5,300. I think 52.50 is going to be a pretty decent battle, which is right above this equilibrium. So we'll just kind of have to pay attention to that. On the downside, really only level on the monthly is the 51.12, and that is the monthly 5 SMA. Switching over to the weekly, you can see we're still one time framing higher on the weekly. We did breach this previous high, so we did kind of bust out of there and get that actual one time framing higher. We're still having a gap here below on the weekly. A gap is a form of excess, which would indicate that we do have some short traders that are stuck below. And you can see this, big wick to the downside, big move up to the +4. We're still on a developing +4. We do have that weekly 9 moving average sitting at the 51.90, so definitely a key level to pay attention to today, as we're about 20 points above that right now. Other than that, the levels above just that weekly high, which we saw a poor high two days ago, and then a poor high yesterday as well. So some key levels that the market's going to need to break above if it wants to get that continuation to the upside. Now switching over to the daily, you can see we got a cessation of one time framing, so the first sign of change, and we got a pretty interesting bar here, a -4 bar, but it's a divergent bar, right? Because the close was higher than the open, and so we're having a little cluster of bars here. The key thing to kind of pay attention to on a -4 day is that sellers got stuck off sides, but buyers weren't able to capitalize on that and squeeze them out and turn this into a non-4 day, which would indicate that there's really a lack of buying. And when we jump to the profiles, you can really see the lack of buying by the shapes of the profiles. Now, below the settle today, we want to be careful in that close from yesterday, 52.1275. You want to be careful being long, right? Today's not really one of those days that we want to be buying dips, I think. If the market cannot reclaim this 52.12 today, then most likely we are going to fade down, and I'll be looking for the prior day's low. The 51.95, 51.90 area is kind of my first target to the downside. If we can reclaim it to the upside, then we'll start looking for this high, look for buyers to show up. We just haven't seen them lately, so we definitely want to see buyers or see some aggressiveness on the buy side to get us more looking for that upside. Now switching over to the profiles here, we can see what I was talking about here with these poor highs that continue to develop. We've had a poor high here, and that's from the 7th. Another poor high here from yesterday, the 8th. This is a very key sign of lack of buying, or just non-conviction of buying. We are starting to develop this little 45-degree angle here off of both of these profiles, which is a sign that there may be some absorption going on here, and so buyers may be building a position in this area. And I think today is probably their day where they're going to want to look to get that continuation. So basically right above the settle, kind of got a little bit of a chop zone inside here. I don't think, I think it could pretty much go either way there. If we can get a break of this poor high and we start to see some bullish conviction, we should have a decent trade that takes us up to these previous unfilled single prints around that 52.2675, which is the previous high, and that 52.32. And then up there, if we see some real buying, then we can have a strong, nice conviction long up to that 43.25, which is our previous equilibrium. It's also an untouched settle, and that 52.50, just a very round number that people can be attracted to. Now below that, and that below that settle, which is that 52.1275, I think the market's weak. They've been kind of building a long position, but haven't really kind of taken it off yet. So if they're unable to get that thing taken off, they may need to bring it down a little bit lower to get, to entice some buyers to jump off the sidelines and start buying the market. And that's why I'm thinking a test of our previous zone, that 95 to 90, the zone that we used back on the 7th. Same zone from yesterday, right? Some nice buying opportunity out of there as well. If there is no buying there, then we'll be looking down for this VPOC and then looking down for that gap, right? A gap fill, although would look bearish on a short time frame, might be a little bit more beneficial to longer term buyers because they'd be getting the market at a little bit of a discount, which is, let's be honest, what everybody wants. Nobody likes to buy the market at full value. Everyone likes to buy low, sell high, right? And that's the same idea with the auction market theory. You get the market on a discount, take your little chance down there. And that's pretty much what I think the market will be looking out to today. Now, we do have a little bit of news. Mortgage delinquencies 10:30. We've got natural gas storage. 1 p.m. there's a 30-year bond auction, which may be a market mover. And then 2 p.m. you've got daily on, and that can shake up the market as people are really kind of looking for any information that they can receive to get an insight on if we are going to do rate cuts, and if we are going to do rate cuts, how many. So always something that you want to be paying attention to. Maybe it doesn't move the market, but at least be aware of it. One last thing here. Let me grab a screenshot of this. One last thing here really to pay attention to is if we were to smash these profiles together, you can kind of see where all the volume is forming, and you can kind of see we do have a slight little double distribution, even kind of a triple distribution, but you see where this ledge is sitting at, and that's that 5184. So if they're unable to kind of claim the top of this distribution, that's why I think this is more of a chop zone than just a flat out buy zone. But above that 20, then you can start to see some bullish momentum starting to build. You'll see a bunch of shorts kind of stuck off sides, right? We figure the point of control here, volume point of control, everyone underneath is short. So you've got all these people short. These people are long. They're getting back into break even. So if they're going to buy, that's where they're going to be buying, that's where they're going to be buying from. If they're not going to buy, they're going to be taking profit, and the selling is going to start from up here. You've got a weak spot here sitting right at the 5200, which is basically the gatekeeper. Right below that 5200, I think the market starts to look really for that 84. So that's kind of where the dip is coming. And this whole area is kind of like a stay short type of zone, sell a rally type of zone. But you really can play on these distributions here. If you're looking to be a buyer and the market starts to slip below this 04 to 00 level, you got to be really cautious, because if the slip from there could lead you down to this lower distribution. Like I said, you kind of have a little double distribution, but even then you're looking at 88. So you've got to be careful if the market starts to slip. You're better off, I think, looking for that market to confirm over that 16. Monitor the 20, but look up for that 26.75.32 area on the high. But other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan, and I'll see you guys tomorrow.